In this video, I'm going to explain those structures and how it can benefit you. Hey, it's Frank Nagy and welcome to my channel, where we help entrepreneurs grow their business in the financial markets. Typically, all types of structured entities provide a degree of liability, tax benefits, and control. Let's first look at the most popular U.S. structures for managing a hedge fund: the limited liability company, or LLC, and the limited partnership, LP. Both the LLC and the limited partnership have one thing in common: limited liability. Liability of particular importance when the fund manager member is directly involved with the day-to-day management of the company. With an LLC, liability can be increased or decreased by determining who's running the company. Investors are considered members of an LLC, while an investment manager is hired to manage it. Managers and managers take on the greatest liability since they are involved with the day-to-day management of the company. In a limited partnership, the limited partners have minimal liability to the extent of their involvement in the management. Limited partners are not supposed to be involved with the management of the fund. It's the general partner's responsibility to operate the partnership. Since the general partner is directly involved with managing the fund partnership, liability falls on him. Every partner or member at the end of the year receives a K-1 form from his or her respective general partner or manager stating the total earnings minus total expenses and their pro rata share of distribution of the fund. Now let's look at an offshore fund structure. The first question I always ask my hedge fund clients is, where will your investors come from? If they're coming from the United States, then it makes practical sense to set up a fund in the US. If the investors are coming from outside the US, it's best to structure the fund in a tax-free offshore jurisdiction such as the British Virgin Islands or BVI. The majority of the BVI funds are professional funds by law. The shares may only be available to investors who are considered professional or accredited investors with a minimum investment amount of no less than $100,000 US. The fund sponsors would also be required to have an administrator, an auditor, a custodian bank, and at least 2 directors. Hiring an experienced hedge fund consultant like Frank Nagy Financial Services will greatly reduce the burden of setting up your hedge fund. A good consultant will make the appropriate introductions with the proper service providers that will best suit your hedge fund needs. If you're thinking about starting a hedge fund, I recommend my book, The Ultimate Hedge Fund Guide. You can click on the link below to find out more about how to obtain it.